We believe so, eventually, that some action will follow. As I think you just mentioned, they said that growth is maybe a little bit on the lower side. It means that they need to do something. This is very consistent with what they've actually been highlighting over the last couple of weeks in terms of what they want to do on the monetary side and further stimulus. So we think that there's more to come for China.
It could, but I would take my cues more from what Janet Yellen said last Friday as opposed to the reading of the payroll report this Friday. I think what you're seeing is the Fed is going to take an incredibly pragmatic approach towards raising rates, and they've sent clear signals to us that this is not going to be an accelerated tightening cycle. So in my opinion, unless you got something extraordinary on Friday that radically changed the Fed's thinking, I think what you're going to see is good news is actually being good news this time in terms of the equity markets.
I think it's some new buying. The seasonals were last week, the week after the March expiration, has a natural downward bias to it, and that lived up to that in spades. This week, somewhat better. You're going into April. April's the best month of the year. Although the beginning, April Fool's Day, has a kind of spotty record, so we'll see where that goes. But I think you've got buying here. The head of the People's Bank of China saying what he did. Had markets all around the world moving back.
There's scope to do more.
And yes,
they need to.
And that has gotten everything moving up. And we were somewhat oversold coming in, so that's boosted. We're getting pretty close to the near-term resistance, which is 2083, 2087 in the S&P.
Just below there.
Yeah, we're just below there, so it wouldn't take much to come on strong. Oil's been all over the lot today, which is somewhat frustrating. But the end of March usually can go out like a lamb, and it looks like it's noisy but happy lamb so far.